For our project implementation cost and source of finance, our project implementation cost is at 94,000. The amount of loan that we apply to the bank is at 41,050. The amount of hire purchase is at 24,750, and the amount of cash we spend is at 28,200. Next part is depreciation schedules. And the first one is for car, and the cost is at 10,000. The economic life is at 5 years. The next is office furniture and fittings. The cost is at 2,060, and the economic life is at 5 years. Next is for signboard. The cost of signboard is at 2,000, and the economic life is at 5 years. For the next part is for machine and equipment. The cost is at 13,000, and the economic life is at 5 years. And the last one is for tools appliance. The cost is at 2,000, and the economic life is at 5 years. And this is the loan and hire purchase amortization schedules. For loan repayment schedules, the amount is at 41,050. The interest rate is at 5%, and the duration is at 5 years. Next is hire purchase repayment schedule. The amount of it is at 24,750, and the interest rate is at 5%, and the duration is at 5 years. Next is our pro forma cash flow statement. For pro forma income statement, our gross profit is at 755,640 at year 1. And it's going to increase to 836,000 and 64 at year 2. And it is going to increase to 991,456 at year 3. Our total expenditure for year 1 is at 280,976. It is going to decrease to 277,665, and for year 3 it is 277,255. For our net profit before tax is at 474,664 at year 1. It is going to increase at 558,399 at year 2. And it is going to increase to 714,201 at year 3. For our pro forma production cost statement, the production cost for 1 year is 456,360, and then it increased to 485,136 at year 2, and it increased to 528,524 at year 3. For pro forma balance sheet, the total asset from year 1 is 568,704. it increased at year 2, which is 1,124,502, and increased at year 3, which is 1,842,967. Same goes to the total equity and liability as well. And this is our financial ratio analysis. For liquidity, our current ratio for year 1 is at 41, and it increased to 47 at year 2, and it going down to 44 at year 3. For our quick ratio, which is acid test, is 40 at year 1, and then it going to increase to 46 at year 2, and it going down to 44 at year 3. For efficiency, our inventory turnover for year 1 is at 30, and it going to increase to 31 at year 2, and it going down to 30 at year 3. For profitability, our gross profit margin is at 62.97 at year 1, and it's going to increase to 63.34% at year 2, and it's going to increase to 65.31% at year 3. For net profit margin, our percentage is at 39.55% at year 1, and it's going to increase to 42.30% at year 2, and it's going to increase to 47.05% at year 3. For return on asset, the percentage is at 83.46% at year 1, and it is going to decrease to 49.66% at year 2, and it is going to decrease to 38.75% at year 3. For return on equity, our percentage is at 94.39% at year 1. It is going to decrease to 52.62% at year 2, and it is going to decrease to 40.23% at year 3. For solvency, the debt to equity, our percentage is at 13.09% at year 1. It is going to decrease to 5.96% at year 2, and it is going to decrease to 3.80% at year 3. For debt to assets, our percentage is at 11.58% at year 1, and it is going to decrease to 5.62% at year 2, and it is going to decrease to 3.66% at year 3. The time interest earned is at 230, and it is going to increase to 339 at year 2, and it is going to increase to 579 at year 3.